President Trump a short time ago telling Walmart that the company should, I'm quoting now, eat the cost.
Walmart plans to cut about 1,500 jobs in a restructuring aimed at trimming its expenses and speed up decision making. The Wall Street Journal reports that the company told employees it will reshape some of its teams, particularly in global technology.
Walmart says their first quarter profits slipped and they have to raise their prices as a result of the tariffs, threatening their low price model.
The American retail empire is breaking under pressure. It began with a comment, a single sentence from President Donald Trump: Walmart should eat the cost. That sentence detonated through the economy like a shockwave. Walmart, the largest retailer in the United States, was already staggering under the weight of rising tariffs, and the president's demand to absorb those costs triggered a chain reaction that has since reshaped everything from household grocery bills to global shipping lanes. By mid-June 2025, Walmart had raised prices across the board, warning of further hikes. In the background, over 10 major distribution centers quietly shut down. 50,000 workers faced layoffs. The company's just-in-time supply chain, once hailed as a global marvel, was now buckling. This is not just a retail story. It is a story about inflation, political retaliation, broken trade routes, and the global stakes of a single executive order. YouTube is not the biggest fan of content like this, but we believe people deserve to hear the truth. If you agree, hit that like button and subscribe. It helps us beat the algorithm and keep going. We really appreciate the support. It all began on April 2nd, 2025. In a nationally televised press conference, President Trump unveiled Executive Order 14,257, dubbed the Liberation Day Tariffs. Overnight, nearly every import entering the United States faced a 10% base tariff, with exceptions only for Canada and Mexico. 4 days later, a second wave of tariffs landed. 60 trade partners now faced retaliatory duties. China was hit hardest, a staggering 145% tariff on most exports.
Walmart delivering solid sales and earnings growth in the latest quarter, but warning on its call that tariff pressures could mean higher prices soon, as early as next month.
Tonight, President Trump is warning Walmart against raising prices, telling the nation's biggest retailer and grocer to, quote, eat the tariffs.
While the president is also facing off with Walmart after the country's largest retailer warned last week it would have to raise prices because of Trump's tariffs.
Walmart's response was swift and public. The company began extracting key segments of its supply chain from the United States. Prices rose, consumers braced, and the White House fumed. When Walmart refused to absorb the cost of tariffs, President Trump doubled down. He insisted the company maintain its low price guarantee. Walmart executives refused. Instead, they pointed to a projected $25 billion loss for Q2 and warned of a retail collapse without action. The fallout hit fast. Shoppers noticed grocery prices jump. A 500-gram tray of beef climbed from $9 to nearly $14. Lettuce rose by 30%. Cereal, $2 more per box. What was once a routine trip to the store had become a financial strain. And this shock did not stop at American borders. Supply chains snapped, port congestion exploded. Container ships loaded with rice, cooking oil, and canned goods were stranded or rerouted. Supermarkets in Asia and Africa reported shelves going empty. In Southeast Asia, American goods vanished overnight. In Nairobi and Manila, prices spiked. Families faced desperation.
Tonight, the White House trying to tamp down fears of rising prices because of President Trump's tariffs.
I was on the phone with Doug McMillon, the CEO of Walmart, yesterday.
On Meet the Press, the Treasury Secretary detailing his talks with one of the country's largest retailers about its warning that some prices will go up.
And Walmart is, in fact, going to as you describe it, eat some of the tariffs. This is all from their earnings call, and on an earnings call, you have to give the worst case scenario.
After President Trump lashed out online, saying Walmart should stop trying to blame tariffs as the reason for raising prices, adding between Walmart and China, they should eat the tariffs. Walmart told investors it will try to absorb some costs of the trade wars, but that shoppers still could have to pay more for things like bananas, avocados, toys, and electronics. On Thursday, the company's chief financial officer explaining.
We're wired to keep prices low for customers, but the level of tariffs that have been proposed is pretty challenging for all retailers, for suppliers.
It's a war on.
The effects of the tariffs spread far beyond the intended targets. Internally, Walmart scrambled to survive. Its famous just-in-time delivery network, designed to minimize warehousing costs by keeping inventory constantly in motion, was collapsing. The shutdown of 10 major distribution centers crippled logistics. The ripple effect hit every vendor and freight partner. Walmart's partners in electronics, apparel, and toys watched freight costs spiral. Contracts that once locked in stable rates now changed week by week. Freight brokers warned of chaos. No one knew what prices would be tomorrow. Even more alarming, Walmart began canceling orders. Chinese suppliers like Hunar Toy Factory, a partner for over 40 years, lost 70% of their contracts in one quarter. American Toy Association members reported pending bankruptcy. Overseas factories slashed production. At home, shelves emptied. The situation at US ports turned critical. In Los Angeles and Savannah, containers stacked up. Some importers, unable to afford new tariffs, abandoned their cargo. Brokers were stunned. It was a logistics version of a bank run, goods left to rot on the docks. The government escalated again. On May 2nd, President Trump threatened a 50% tariff on all European imports unless new trade terms were reached. The threat sent European markets into a spiral. In just 3 days, EU markets lost $180 billion. Germany's auto sector froze. The Euro Stoxx 600 fell 4.4%. South Korea suffered a 25% tariff on cars. Its central bank warned of a 4% drop in Q3 exports to the United States. Cities like Gwangju and Ulsan prepared for mass layoffs. Back in the United States, Walmart workers were squeezed the hardest. Warehouse employees lost overtime. Store associates were pushed onto erratic split schedules. Summer hiring freezes locked out thousands. Labor unions sounded the alarm. These tariffs were hitting working families hardest. On May 28th, a US court paused key tariffs under EPA authority, but uncertainty loomed. Would the tariffs return? Would they increase? Businesses hesitated. Contracts stalled. Inventories sat untouched. Vietnam and India could not fully replace China. Textile mills in Hanoi reported 6-month backlogs. Indian electronics factories struggled to fill Walmart's orders. Shipping costs exploded. Rates on the Asia-US route more than doubled, from $3,500 to $6,500 per container. Carriers warned of further increases. Warehouse space vanished. Companies hoarded inventory. Bonded warehouse rents quadrupled. Storage startup Flex was overwhelmed, reporting a 6-fold jump in inquiries. Walmart's cold chain, the infrastructure that ships fresh meat and produce across the globe, began to collapse. Beef exports aged out. Groceries spoiled before sailing. Farmers suffered a second trade war. Small importers faced financing cuts as banks pulled back. Investors exited supply chain startups. The situation worsened with the leak of Walmart's internal memo, Project Triage. It confirmed the shutdown of 10 distribution hubs. Communities across the United States braced for economic fallout. Restaurants, truck stops, and school districts tied to Walmart's logistics economy were thrown into crisis. Amazon moved quickly. Discounts at Whole Foods targeted disaffected Walmart shoppers. Dollar General expanded its food sections. The grocery war escalated. On social media, panic surged. Hashtags like #MPISLES trended. Videos of empty shelves went viral. Public anger rose. Walmart's losses approached $25 billion. The company's long-term strategy shifted. It launched the Made in Heartland initiative, a $5 billion investment in domestic manufacturing across Arkansas, Ohio, and South Carolina. Simultaneously, Walmart partnered with robotics firm Symbotic to deploy Link 16, a predictive AI-powered logistics system across 400 fulfillment centers. Walmart also accelerated its exit from China. In the first quarter of 2025, it reduced Chinese sourcing from 60% to 48%, but the political environment remained volatile. Vietnam, which was expected to absorb a large share of Walmart's sourcing, was threatened with anti-dumping tariffs. Wall Street reeled. Walmart's stock dropped 11% in 6 weeks. That erased $37 billion in value. ETF outflows hit $6 billion. FedEx, UPS, and J.B. Hunt saw sharp declines. Warehouse giant Prologis plunged 9% in one day. And the pain continued, with bonds downgraded and freight costs ballooning. Walmart's $5 billion supply chain investment was paused. The fear index surged. Analysts warned of recession risk. Meanwhile, Brussels warned that 70% of EU exports to the US were at risk. Retaliatory tariffs loomed. Mexico warned of 400,000 US jobs at stake. As trade talks stalled, the question deepened: was this economic warfare or economic self-harm? And what comes next? With groceries surging, freight costs ballooning, and factories shutting down, the retail collapse is no longer a risk. It is a reality. Let us know what you think in the comments. And do not forget to subscribe to Auto News and turn on notifications so you never miss our latest political economic updates.